We're about to go deep on the Bitcoin cycles with a discussion with Benjamin Cowen, a leading analyst here in Bitcoin land, and one of my favorite channels to watch to get some perspective on where we are in the Bitcoin cycle. You probably know him already. He's got an amazing channel, and today we go deep on all kinds of theories about where we are in this crypto bull run and where we are going. You're definitely going to want to watch this one front to back as it is jam-packed with information and observations. If you guys are excited, go ahead, destroy that like button. Remember, each and every comment on this video is entered to win your own hardware wallet. And with that said, please give Benjamin a very warm welcome and let's dive in. Welcome to the show, Mr. Benjamin Cowen. I've been following your content now for several years, and it's super exciting to have you here to discuss these wild crypto cycles that you use an amazing approach to form your viewpoint on. Thank you for coming on the show. I cannot wait to discuss what's going on here in Bitcoin land with you.
Yeah, thanks for having me. I'm happy to share my models. We'll see which ones hold water over time, I guess.
Well, so far so good. I remember we had a little bit of an interaction on Twitter, and you commented under one of my posts, and it started to get really interesting. So I figured, hey, let's just bring this over into the long form video format, and let's have a chat. So I guess the first question is, who is Benjamin Cowen, and like, what do you focus on here in crypto?
Yeah, so I focus generally on non-traditional TA. I guess I don't really look at what a lot of people might look at, like shorter time frames and stuff. I look at mostly long-term moves in the market and just try to like do the best I can to time those momentum shifts and kind of recognize that I don't, I'm not nearly smart enough that I need to be to actually understand what's going to happen tomorrow. But maybe we can look at long-term trends in the market and then sort of try to figure out, okay, like, is this a general time that you should be buying, or is it a general time that you should be selling? And kind of doing away with the mentality of the idea that we can always time the top or time the bottom, just sort of DCAing in and then also DCAing out based on just kind of where we think we are in the grand scheme of the cycle, and not getting too focused on if you time things exactly.
Yeah, I think that that's a fantastic approach. If you just generally know, okay, over the next few months, I want to be adding. Over the next few months, I want to be taking some off. That's a really, really easy way to view it, and it saves you from trying to make, momentary, time-sensitive, pressing decisions like, oh, I'm up this much percent. I need to quickly hit the smash sell button. So I think it's a
Right.
really good approach that will probably, if you zoom out, net the most long-term gains.
Yeah, I think so. And I think also too, like that approach, it actually helps ensure that while all of your buys and sells won't time the bottom or the top, if you do it regularly at a time when you think, you think that, sorry if you hear my kids screaming, but if you do it at a time when you think it makes sense, you're more likely to time it than someone who's just looking for one sell, one moment in time to sell or one moment in time to buy. Right. And by DCAing, as I mean, most people in crypto know, like it's generally the way to go.
Yeah, well, I mean, I feel like when you first get into crypto, everyone looks at the chart and goes, well, why don't you just buy the bottom there and sell the top? And
Yeah.
it looks so easy in retrospect. But really, I think as you get deeper into crypto, what you realize is the entire market expands and contracts in unison. And obviously, altcoins expand faster and contract faster than Bitcoin. So if you just generally know whether you're in an expansion phase or a contraction phase, you have a really good idea of whether or not you should be adding or subtracting from your positions. And I feel like just generally that compass of whether you're growing or shrinking over a multi-year trend, over a long-term trend, would essentially allow you to more or less succeed. Because if you know, hey, gaming's hot, NFTs are hot, DeFi's hot, and you start allocating during a growth period into any of those categories, you're probably going to do great. But if you start allocating during a contraction phase, it's going to be a while, right? Or I guess reverse that. You want to start selling as you're getting to the end of that growth phase, and you want to start adding as you're getting to the bottom of the contraction phase. Is that how you view the market?
Yeah, generally speaking. And you don't really worry about like, like in like back in 2019, 2020, there were a lot of little bunny hills for the price of Bitcoin. Like we went up to 14K, we came back down, we went up, we came back down. And those are sorts of things that you just don't even worry about, right? You just DCA because you say, you know what, like Bitcoin's well below the all-time high. It's, all of the models that we know of suggest that we should be going, around six figures at some point this cycle. So the idea that we need to concern ourselves with, a move from like 4K to, to 12K and then to 10K, like that's just DCAing time, right? And I think too, when you look at the market like that, I don't know about everyone else, but I like it when the price drops. Like I really do during that time, because then it's like, I'm just DCAing anyways. And I sort of operate in a manner of thinking, well, I'm pretty sure the price of Bitcoin will trend to six figures this cycle. And if that's the case, any short-term moves to the downside more or less just represent an opportunity and not a reason to like, get super upset or anything. Now that is a somewhat deterministic view, but I've almost found that if I don't, it's bad to operate deterministically, of course, especially with altcoins. But it's hard to navigate crypto if you don't at least think Bitcoin will trend up with time, right? Like if you don't think that, then it's hard to make the case for a lot of other cryptos because Bitcoin controls the market. And obviously coins other cryptocurrencies will have certain periods where they'll outperform Bitcoin. But Bitcoin is, it's been around for the longest. We have the most data for it. And we generally think it's going to trend up with time. And it just goes through these boom and bust cycles. And, right now, I don't think that I've seen a lot of people calling for like 5K Bitcoin, 7K, 10K. I don't really see that being a very likely possibility anymore. Like I feel like those days are over. And those people will probably be waiting forever for those prices. And it's all about trying to figure out, are we at a momentum shift now, or are we sort of just like, in the middle of the cycle, right? Are we just in the middle of the cycle? And this has just been like one massive lull in the market that we've experienced over the last several months.
Well, I'm here to ask you the exact same question, which is this a lull in the market that is bound to resume, or are we experiencing a modern bear? And that's the real thing that I think was the conversation that we had on Twitter, which is this a bear market? Is it a short bear market, or is this part of a larger cycle? And in the event that cycles now include, 3+ month bear markets, are they part of the same cycle? At which point do we draw the line and say, actually, this cycle is no longer like how does it work in your mind, and how do you frame the bullish moves versus the bearish moves?
That's a great question, and I like your perspective on that as well, because to some degree, cycles are somewhat subjective, right? I know some people that consider the 2013 double peak cycle to actually be two separate cycles. They don't look at that and say that's one cycle. They say, no, it was two cycles, because after the first move, you had an 80% correction. It was an 80% correction. And so my thinking is, and I said this back in May, is that I think we need a 3 to 6 month. I said lull in the market. I also said bear market. And the problem when I say bear market that I failed to understand is that a lot of people, naturally, if they hear bear market, they assume what you mean is, like a 2-year phase or a 3-year phase where we're either going down or we're not breaking new all-time highs, right? So the reason I thought that was because I look at it and I say it looks pretty similar to 2013. There's a lot of similarities between it. We weren't really testing, that 20-week, the 20-week estimate, the 21-week EMA. We weren't testing those levels like we did last cycle at all. And the idea being, well, were we too far gone to hold it? And it turns out we were. It turns out we were too far gone to hold it, because we fell below it, I think, at around like 48K or something is when we broke below that 20-week SMA, which in 2017 and 2016, we never really fell below those levels. So yeah, I think the question ultimately becomes, well, how do you distinguish between one cycle and another? And there's obviously, there's different ways that I've seen people do it. One way is, let me see if I can share my screen here.
Go ahead.
Yeah. So can you see that?
Yes, we can.
So one way is to measure it by, like a potential market cycle bottom, right? But then even that's somewhat subjective because how do you define what that is? And for me, it generally means after like a long correction, like an 80% correction, and then now we have to go sideways for a long time before we're putting a new all-time high. So for instance, some people say 64K is the peak. And what would need to happen to say that 64K is the peak of the cycle? In my mind, well, I mean, if this does end up being a dead cat bounce and we just go back down to $10,000 or something like, the bears are calling for, then we look back and we say, all right, 64K was the peak, like we can't claim it's a new, or we can't claim it's part of the same cycle if it goes, from 10K to 64K and then back to 10K, right? That's a cycle. But if it keeps trending up, and one thing that some people look at are as measured from the halvings, right? And I don't know if I think I have here's a chart that I had Plan B on my show the other day, and this is one of his charts. And as measured from the halving is one way that people like to look at it, right? So if 64K is the peak, then if you measure it from the halving, you're basically assuming that 64K will not be broken until at least after the next halving, right? And the next halving would facilitate or spark that new move to new all-time highs. The main reason, some of the main reasons I don't think we are at a market cycle peak of 64K is because, first of all, if we look at the prior cycles, we can see that in general, they lengthen, right? And this is not a popular theory. I mean, I have been ripped apart on Twitter more times than I care to count on this theory. And I don't look at it like I'm out. I'm not out to get Bitcoin or anything. I just think that it's dubious extrapolation, and I just say the data suggests that so far every cycle has gotten longer than the one before it. And I think one common misconception is, well, everyone thinks, well, how is that really true? Because we know we had a cycle peak in 2017. We had a cycle peak in the end of 2013, right? So you just say, well, it just every 4 years. What's this nonsense of lengthening cycles? But one of the things you have to consider is that there was also a peak in 2011, right? There was a peak in 2011. And also, the peak price of Bitcoin has not always happened in December in a cycle. In 2011, it happened in June. In 2013, it actually happened, if I remember correctly, the very end of November. And then we sort of hung around that price going into early December. But I think technically on some exchanges, we were below the November high. Mm-hmm. So far, we've had 3 peaks. One, I would say, is in June of 2011. The next one in November of 2013. And then the final one was in December of 2017. And if you measure it from when we actually have data for Bitcoin, starting in, say, like the summer of 2010, the first cycle is about a year. The second one is about 2.5 years. The third one is about 4 years. So the reason everyone thinks that we're on a 4-year cycle is because the last one was 4 years, right? So it's recency bias, thinking that the last one is 4 years. Also, it comes from the halvings, right? And the halvings are approximately every 4 years. They're not exactly every 4 years, right? Because the first halving happened late in the year of 2012. The second halving happened in like July of 2016. The third halving happened in May of 2020. So you can see that they haven't been exactly 3 years, or 4 years. So if the idea is that it's just a certain period of time after the halving, we also have to recognize that the time of the halving is actually changing in the year as well. So I look at this chart and I say, you know what? It seems like we are where we need to be. Like I was very concerned, or I don't know if concerned is the right word. I was very uneasy over here when we were at 64K so quickly, back in April. And the reason being is because I felt like we were keeping pace with the last cycle, which we've never done before, not for an extended period of time. Cycle 2 was not able to keep up with cycle 1. Cycle 3 was not able to keep up with cycle 2. Therefore, the argument, right, our thesis was that cycle 3 is not going to keep up, or cycle 4 is not going to keep up with cycle 3. And the reason is because, well, as we go up our curve, it's going to be harder and harder for us to go up another 10x just because of the market capitalization of Bitcoin, the amount of volume it's going to take. So I'm not saying we can't ever go to 300K. I'm not saying we can't ever go to $1 million. It's just going to take us longer to do each 10x than it did in the past, just because of the amount of volume it's going to take for us to get there. So yeah, this is a good chart, and for people who don't want to measure it from the bottom, remember you can also measure it from like the halving, and also say they've lengthened as well. I mean, the first one happened after say 13 months. The second one happened after approximately 18 months after the halving. It seems reasonable to suggest that the next one could happen, like 24 months or something after the halving, or something like that. And if you look at this, we're actually getting pretty close to already having lengthened cycles as measured from the halving. Now, would I use that to sound the horn on lengthening cycles if we end up going? No, I wouldn't. And I would say we need to go into 2022. But as measured from the halving, we're already looking at around 16 months, and the last one only went 17 months. And again, the reason why that seems weird is because this halving happened in May as opposed to July. So it happened, a couple months earlier. So that's why we're already, getting close to where the last cycle peaked after the halving, because it happened later in the year, right? So it'd be like if now we were already in October rather than August. So yeah, that's the main reason. Just the idea that I think the cycles will lengthen just based on historical data, and also the idea that whether you measure it from the bottom, whether you measure it from the halving, you sort of see that play out. Now, there are counterpoints to it. I mean, I can give you a chance to respond if you'd like, just because I know I just spoke a lot.
Yeah, no, I love this theory, and I think that understanding cycles, like I said at the beginning here, it's so important to actually maximizing your return from the market. Now, on that note, I will say that what I've been really intrigued with is, of course, we have I guess you could call it the dogma of the 4-year cycle. We have this almost religious belief that Bitcoin giveth to us thy pump every 4 years, blessed be the halving and the fruit. However, the reality that I'm seeing is that I started putting out a theory back when the crash happened in May that maybe we're not actually looking at 4-year cycles that are lengthening to really ridiculously long, eventually never-ending smooth uptrends. However, maybe we're actually experiencing shorter cycles, because if you look at 2019, that was a mini cycle, and that actually doesn't get any credit, right? 2019 gets no credit for being a bull market, but from pretty much December 18 through July of 2019, we had a wild bull market where alts pumped, Bitcoin pumped, everything went up. And that was by all means very bullish, but then it crashed, and you could call it a bear market retracement. But if you view that as a 6-month cycle, and then you see the 2020 DeFi run as more or less a sort of 3 to 6 month cycle. And then you look at the beginning of 2021 as sort of like a 4-month cycle. And then we're seeing, okay, well, maybe we'll come back to life and have another cycle right now. Is there a logic? Is there an argument here that we're actually getting these sort of more micro cycles?
Yeah, I mean, I would probably look at it. I think that's a valid argument. And the whole idea, to get to your first point about 2019, yeah, I mean, I think that's a great point that people overlook, and they overlook it because of some of the things in the news that may have been happening, or they overlook it because Bitcoin didn't put in an all-time high. But at the same time, if you just assume we don't know what happened to Bitcoin before December 2018, like we just don't know, and you just showed us the chart of Bitcoin, we wouldn't write off what happened in 2019 as nothing, right? We would say, look, that was a crazy run. Bitcoin just went up like 3 or 4x, and it went up like 4x in a relatively short period of time, and then we cooled off for a while. But you'll note the cool off phase was still above the prior, the area that we started before. Mm-hmm. Yeah, I think there's some merit to that idea of sort of these mini cycles. I would say it's probably, from my viewpoint, I would say it's like a mini cycle within a longer cycle. But I can also understand, a contrary viewpoint to say, at some point cycles are going to be subjective, and if say like lengthening cycles are true, and we go into 2022 or something, and then we end up having like a crash and then like a 2 year accumulation phase or something, then you could easily make the case that, well, why should we measure things by length in cycles if future cycles are going to take 8 years, or 7 years? If they're going to keep getting longer and longer, then people are going to become a lot less interested. And I don't care if of buying the bottom, because it would have been so long ago. They only want to know, okay, well, what can they do now, right? Mm-hmm. There's been a pullback. Can we expect another run? And I agree. I mean, I do think we will have another run. Like, I feel like Bitcoin will go to 100K this cycle. Does that have to happen this year? I don't think it does, but it could. It could. We could be at the beginning of another leg in the market that will ultimately take us to 100K. I mean, I think we'll probably go above 100K. I would like for us to overshoot it a little bit, and then maybe have a correction. And so that's what I'd be looking for. I'm thinking maybe between 100 to 200, something like that, for a new leg. And I fully expect that leg to extend into 2022. And whether we think about it like lengthening cycles, or whether we think about it as just, hey, the network effect is strong, right? Bitcoin, institutions are buying Bitcoin. It seems like it looks really, really strong right now. If we're going to have another leg up and we're going to put in new all-time highs, it's going to take us time to get through some of those price milestones. I mean, think about how long we've spent at 58, between 50 and 65K. I guess I'd have to imagine that my emotional response, which is not always the most valid response, is that it's going to take us a little bit of time to work our way through 50K and 60K, just because there's probably a lot of people they're going to have to cover at those levels, because of getting trapped when maybe they bought before and then it went down. But then the other part of me says, well, remember back in 2018 and early 2019, when everyone said 6K was going to be impossible to break through without 5 months of testing it. And then we broke through it like it wasn't even there, right? Like, it's like 6K, we just broke through it. We were there one day, and then the next day we were 7K. The next day it was like 8K. We never looked back. So yeah, I feel like you bring up a good point. It could be that we have these legs in the market. I think one thing that'll be interesting with that theory is, how do you intertwine it with the idea of, okay, well, what if, say, like, the next leg up takes us to back to the same price, right? Or even lower than where we start or something, right? Because right now, if you look at this chart, it's sort of just like a general uptrend, right? Like, it's a general uptrend. But like, imagine it keeps going up like this, and then we fall off and come all the way back down here or something, right? Then I would say that was just a longer cycle, and then we had our 1 to 2 year bear market accumulation phase or whatever.
Here's my problem. Here's my problem with relying exclusively on cycles. Is it takes the most important variable in the equation, in my mind, out of the equation, which is innovation. And I think that to view a fundamentally technology innovation-based movement as a non-innovation fueled, non-network growth fueled trend is tricky for me. And that's why I always get so excited about Ethereum, NFTs, DeFi, other L1s. It excites me because I know why I picked up the iPhone. I know why I started coding apps and games. I know why I even got involved with tech entrepreneurship. It's because I loved these products and I wanted to be a part of this. And Bitcoin is a product. Ethereum is many products. And I just don't understand how we have to wait 4 years for time to tick away, for the world to have more demand for this. So that's my only thing that I think is the big change that we'll experience. Is up until now, the 4-year cycles have reigned supreme because you have essential speculation is the only vehicle. Speculation is all there is. And speculation goes in booms and busts. Now, once we get to product adoption, the growth should be tied to users. And it's Metcalfe's law, in my opinion, where the bigger the network, the bigger the value. And that's why you see Axie Infinity growing, right? Axie, they're adding users. Quite simply, they're adding value. It's like Just that simple. And that's why even in a crash, even in a bear market, these, Axie's growing exponentially because they're adding users. And so, how do you view users and user growth, network growth, innovation as affecting these cycles?
Yeah, I mean, I think it does influence it, and it sort of goes back to the idea of, and I know you're sort of saying that, like, okay, why does it have to operate around cycles at all, right? Like, why can't we just go up? Yeah, I mean, if you think about it, I mean, even the LinkedIn cycle would say we could be trending up for years. I mean, the peak could be in 2023 or something. But yeah, I agree that, like if you look at the stock market, well, I don't want to say anymore, but at least people used to value it based on their fundamentals, right? And recently, I think we always thought like crypto would become more like the stock market, but it seems like the stock market has just become more like crypto.
That's the truth.
Yeah. But yeah, I do think there's a lot of validity there. And I think right now, though, we are still very highly speculative because even NFTs are completely, like, we're only scraping the surface, I feel like, of what the potential with things like NFTs even are. Like digital art is a great place to start, right? I mean, it's a great place to start. And it has made a lot of a lot of artists, their lives are, now forever better because of crypto and the NFT space. And we brought on new people that would have never otherwise come to the space if it had only meant buying crypto and waiting for the value to go up, right? They're here because of, like they can put out art and then people are happy to buy that art and they sort of see it as like a revolution in like, in art and whatnot. So I do agree that there's certainly a lot of value, the underlying value. And I think you will see a lot of projects die off over the years because it's going to become very apparent which projects actually provide that value and are being used and then which ones aren't, right? Like I love Ethereum and I think Ethereum is far ahead of its, competitors, right? I think it's far ahead of its competitors. But there will be some other projects that will, they'll form their own niche and they'll do quite well. But with that said, there's going to be plenty of them that just sort of die away, and they could still die away even in a bull market because, if the market says, you know what, we value this platform, users are going to this platform over this other platform, then the other platform I feel like eventually just has to die off, even if these other projects are going up. If you look at the last cycle or the last let's say look at the last like mini cycle, if you want to call it that, like the mini run, the run from like say like 10K to 60K. There were a lot of projects that didn't do anything, and you could probably argue, well, why didn't they? It's because no one uses them, why are the Ethereum gas fees so high? It's because people use it, it's because people actually use it. And if they wanted to lower the gas fees, they could, but they don't want to because they don't want to. Well, they do. They just want to do it in the right way, right? They don't want to make it super centralized in order to lower the gas fees. So they're trying. They're going with other solutions. So yeah, I agree that there's some underlying value there, but I also would say that like valuing that or putting a price on it is still somewhat speculative at this phase because we still don't really know how it's going to impact society. There's still a lot of regulatory concerns. And so that's the one thing I'm still cautious about. I'd say one of the main things. But with that said, I mean, even from the idea of LinkedIn cycles, if this is the phase of institutions, which I mean, we see institutions coming on board all the time. If it's the phase of, NFTs and exploring that space, the phase of DeFi and people sort of taking control, and it's the phase of all this innovation. Why does it have to end in 2021? And that's what I don't get. And then the other argument I've seen is, well, the money printer goes burr, right? And so we're going to keep going up this year. But then I'm like, well, is it going to stop going burr next year? Nope. Are institutions going to stop buying in 2022? All these reasons that we like to say, well, it's going to go up in 2021. I don't believe that stuff is just going to suddenly stop in 2022 and then we're going to go down for the entire year of 2022 and then spend 2023 and 2024 sort of in an accumulation phase and then rinse and repeat in 2025. I completely agree with you. I don't think that's going to happen, right? I think that the market is going to continue to trend up for a while, and a lot of it is based on the data. That's what the data tells us is what's more likely to happen. And as you said, I mean, if this is we're innovating, right? We're innovating. People are actually using this stuff. Why does it necessarily have to end in December just because it ended in December last time?
Yeah, I think it's the recency bias that you pointed out, right? And when you look back at why we crashed in 2018, I mean, how much of the market was in speculative ICOs with absolutely no product? I mean, you're talking about insane amounts of money. And people knew that. They knew that there wasn't substance there. And anyone who really was deeply involved, especially the biggest money bags, you think about the people who were in on the pre-sales, who helped put together the cap tables, who were there with the founding teams, they know what's going on and they knew how far away from real product adoption these things were. So selling those insane eye-watering valuations was probably not a rocket scientist level maneuver. It was a pretty sensible maneuver. And that's what we saw is as a big wash in the spring was we saw IDO mania. It had echoes of ICO mania, slightly different structures, smaller raises, but you had just wild valuations being achieved by projects. And a lot of these projects have since completely faded away. And so when there are excesses, there will be washes. And there will continue to be excesses for a while. Now, that said, what you're saying is so accurate. NFTs and DeFi, they are here. They're real product categories, and we will see user adoption coming from all different sorts of avenues now. And I believe that will fight the forces of what would have been probably an 80% correction off of the highs. But because we have products, because we have usage adoption and real needs to fulfill here, well, we're not going to see the same long, exaggerated bear market because we are no longer in the theoretical place. So I would love to see that play out and see both things at play. In my opinion, the 4-year cycle is real. We get a deflation, we get a shock to the supply of Bitcoin every 4 years. That changes the fees structures for miners. That changes a big structure from the monetary policy of Bitcoin. That will help. However, there's no reason why we have to completely crash and burn every 4 years either. So I see a positive, but I see that over time we might have less of a negative.
Yeah, I completely agree. And I feel like halvings have an effect. I mean, they definitely have an effect. The hype, even leading into the halving before the price goes up, you can noticeably see that, people are talking about it. It's a big deal. So we cannot pretend like halvings just don't have any effect. I would agree. Like, I feel like future halvings, maybe they don't necessarily, kick off. Maybe future halvings keep us from going down, as well. Like, that's just one more reason to not experience like an 80% correction. Like, imagine this market cycle trends up into 2022. And if it goes into 2022, then we know, okay, we are experiencing some level of lengthened cycle, whether you measure it from the bottom or the halving. Then the question becomes, how far does it lengthen, right? Does it lengthen into the second quarter? Does it lengthen into the fourth quarter? Does it go to 2023? Does it go to 2024, right? Like, how far does it go? And if it goes extremely far, then we get the really fun question of, well, we haven't had a correction, or like we haven't had an 80% correction. But there's another halving coming up. So like, what does that mean? How do you navigate something like that? Because, if Bitcoin, let's say Bitcoin goes up to like 100K, let's say like super bullish, maybe goes like to 200K or something, and we're chilling at 200K the end of 2023, and we're knocking on the door of a 2024 halving or something. What do we expect? What do we expect to happen? So I would say that the halving really helps. Like, it really helps Bitcoin. I don't necessarily think it's always going to immediately mean it's going to go up 100x, but it certainly helps us. And I mean, if you measure the price of Bitcoin from the halvings, from all the halvings, all three of them, 2012, 2016, and 2020, we can see that the price does go up following the halving. Maybe not instantaneously, maybe not like that day or that month, but over the next couple of years. I mean, after the first halving, it went up over the first year or so. The second halving, maybe a year and a half. I agree. Like, I feel like the halving has an effect. And that doesn't necessarily mean we have to have an 80% correction going into future halvings, especially if we're having, innovation, new people constantly being onboarded into the space that are actually using it for real world value, which is what artists are using it for. I mean, they're getting real value out of this stuff. And I'd like to see it expand. I mean, I would love to be able to buy a house and prove ownership on the blockchain, that kind of stuff. So I'm hoping this is sort of what we see, and I'm really excited to get into 2022, and I'm hoping that we get into 2022 and we see, okay, no 80% correction, right? Like, what if we go to new all-time highs? And then it'll make a new argument. Like, it will have a new thing to discuss, because then it'll be clear that that the peak doesn't have to happen every 4 years, exactly down to the to a December or something.
The FOMO. The FOMO would runneth over.
Bring up new questions.
The FOMO would runneth over if people realized that they didn't have to wait 4 years to get their precious all-time highs. I agree. In fact, on that note, I'd say that maybe shattering this 4-year cycle concept is quite possibly one of the most healthy things that the crypto ecosystem could accomplish. Well, with that in mind, I feel like I've learned so much from you. I could talk to you for hours about this stuff. But guys, go check out Ben's channel, linked in the description. Awesome content. Any final words of wisdom for the audience here as we enter into September of 2021?
Okay, yeah. So I will say this about September. I don't know what's going to happen this September. I never do, right? I never know what's going to happen next month. But if history is any indication, September has not always been the best month for Bitcoin, right? It's not always been the best month. If it pulls back, it doesn't mean the cycle's over, right? It doesn't mean the cycle's over. I would say look at pullbacks as opportunities. Especially as we continue to navigate on into the end of 2021, going into 2022. I would say all of this, any pullback is more or less, in my opinion, by Bitcoin, a great opportunity, as it was when it went down to 30K. So try not to sweat these short-term price movements. None of us really know what's going to happen in the short term, even if we pretend like we do. I certainly don't anyways. So I would say, just be cautious about don't foam or don't fear sell or something. If something like that were to happen, just stay focused on the long-term trend of Bitcoin and don't sort of sway from that.
Well, thank you so much, Ben. It has been an absolute pleasure. We hope to have you back on the show very soon. And everyone, please go check out Ben's channel. Go give him a follow. Amazing breakdowns on the market. Thank you, Ben. Well, I hope you guys enjoyed that. I know I certainly did. I learn a ton from Ben all the time. I could have spoken with him for hours on end about these cycles, where we are, and different theories about how we got here and where we're going. But now it's your turn. Leave a comment in the comment section below and let us know if you enjoyed this particular video. I'm going to be on Ben's channel in the not too distant future, talking about my own theories and my own viewpoint on how we are going to evolve as a marketplace, as an industry. Again, if you enjoyed this video, all I ask is that you destroy that like button. It's a free and easy way to support the channel, and it really shows the YouTube algorithm that this content made you happy. With that said, my name is Elio Trades. You can find me on Twitter at Elio Trades. Make sure you follow Ben. His socials are linked in the description of this video. As always, if you want more videos like this, make sure you subscribe and put that bell notification on. We're bringing you daily updates, oftentimes covering time-sensitive observations on the market that help you get ahead and stay ahead of this wild ride that is crypto. Once again, I thank you so much for watching, and I'll see you very soon on the next episode.